Ever heard about Zai Lab? Well, maybe you should. Maybe this is a stock that can multiply your investment, and maybe this is going to be China's next biotech superpower. As always, this does not constitute any investment advice. Let's jump right into this presentation. I know exactly what you're thinking. Are they crazy? Haven't you seen what's happening on the news? What's happening with the Chinese crackdown? Billions of market cap evaporated over the course of a couple of weeks, and this still does not seem to be fully finished. Well, sometimes where there's chaos, there's opportunity. Why should you even care? Executive summary. Because I know you don't like reading charts, here is a little bit of a slideshow for you. Zai Lab is the gateway to China for the global biopharma industry, and it offers a unique investment opportunity because of that. The company has 4 products on the market and a strong pipeline of 10 plus development candidate launches in the near term. Despite the volatile regulatory environment in China, improvement in healthcare is still a top priority for the Chinese government as laid out in their 5 and 10-year plans. The stock is listed in both New York and Hong Kong with a market cap of around 11 billion US dollar, and the company has a strong cash position of 1.77 billion and is projected to reach more than 1 billion in product sales by 2024. Now today what we want to do, here's the agenda. First of all, qualitative analysis, after that quantitative analysis and risks that are going to be presented by my colleague Kevin, and lastly the conclusion and investment strategy. As always, quantitative analysis and especially the risks might be skipped by degenerates and YOLO investors. Let's start with the quantitative analysis, shall we? Here you see the founder of Zai Lab. That's Samantha Du. She has experience at Sequoia Capital and Pfizer. And why is this so important? Because this uniquely puts her in a position where she's going to be able to bring Zai Lab to success, being able to manage a portfolio, pick winners, something that she has learned for sure at Sequoia, as well as being deeply embedded into the biotech space with, experience at Pfizer, for example, but also having co-founded Hutchinson MediPharma. What does Zai Lab do? They focus on the so-called commercialization stage. So they help to bring drugs to the Chinese market. Now, how can we think about that? Their ability is not to develop new drugs, but they are partnering with biopharma companies outside of China and helping them bring these products, these drugs, to the Chinese market, to the Chinese consumer. And what's that called usually is it's a license to sell, and they're making money by taking either upfront payments or royalties from future sales. But they're not only doing that, Zai Lab is also currently diversifying its revenues. So what they're doing is they're allocating resources to in-house drug discovery, and they're building an internal research center. And so what they're trying to do is to produce 1 to 2 global investigational new drugs per annum themselves, which is nice. We like to see when companies diversify, and Zai Lab certainly is a great example of diversified revenues as this company keeps maturing and perfecting their approach to winning in the market. So let's dive a little bit deeper on what they do and why this might be an interesting case of a company. So Zai Lab has great experience in partnering with multinational corporates outside of China. And one thing that's difficult about that is picking the right partners, right? There's so many biopharma companies out there. Which ones should you pick? That's why Zai Lab has established a great team of business development people who go out, pick the right partners and help these partners navigate China, bring their drugs to the market. That's why right now they have 10 plus new launches in the medium term in the pipeline. And their strategy currently is geared towards serving unmet needs. So they take a look at the Chinese market, what are drugs that we need in the future. They analyze that in high detail, look at the market needs, but also look at what the government is telling them in China. What are things the government wants to push where they know they need help from outside, from foreign companies. And that's, for example, women's cancer, lung cancer, autoimmune and infectious diseases. Here's a little bit of an example of how that works. Now this is like, looking at a typical business case in business school. This is a prime example on how Zai Lab makes money. So in 2017, Zai Lab entered into an exclusive license agreement with 5' Therapeutic to develop and commercialize bemarituzumab, a targeted therapy for gastric and esophagogastric junction cancer, basically, in Greater China. Now, 3 years later, in 2020, 5' announced that this drug met all 3 efficacy endpoints and led to clinically meaningful improvements in progression-free and overall survival. Okay, so they suddenly had the proof that this thing actually works. And in 2021, Amgen paid 1.9 billion to acquire 5' in 2021. Now, what does that mean? By entering into an agreement early on, Zai Lab was able to develop and commercialize these drugs, these products in China for a small upfront payment. Back then it was 5 million and probably a couple of additional milestone payments, but 37 million, let's make it 50 million. And then Amgen paid 1.9 billion to acquire 5' in 2021. So very nice case on how this worked out for Zai Lab. And now let's talk about something that's of course always a big struggle in China. What's the regulatory environment like? When we invest in China stocks, we need to take a look at what the regulatory expectations are for the future, and we say Jack Ma approves in this case. Just kidding. Jack Ma might be the wrong proxy anyways. So what has happened? We know that this summer there have been significant regulatory changes, for example in the for-profit education sector, but also in the tech sectors. And these changes have really affected the overall market. So also healthcare has been affected by additional volatility. Now, what's China's long-term plan? China does want to foster a world-class healthcare system for its population, because one thing that's for sure is China's population is aging. That means they need better healthcare. And the state of the art is Western companies in some verticals have more advanced drug developments, which China is very well aware of. So they are dependent on those, which makes the whole case quite compelling. The regulatory environment seems to be interesting. Biotech is a priority industry in China's 14th five-year plan, and all of this for us forms a pretty positive outlook on the regulations. Now here are a couple of the very recent regulations that are all positive for this industry and also positive for companies like Zai Lab. So the approval time went from 2 to 3 years to 60 days. We have accelerated drug approval pathways, and all of these regulations are really going into the right direction. Lastly, there is an increase of the prevalence of cancer types globally, but especially in China. Companies like Zai Lab are some of the few players that are actually addressing this problem. Now, having said all of that, this gives us a clear picture of where Zai Lab stands qualitatively. Now let's take a look at the quantitative side of things.
Hello, everyone. My name is Kevin Francis Marqueda, and welcome to the Quantitative Analysis. And I'm going to talk to you about the financials and how the story relates to the numbers. So, just a quick education for you. Biotech companies can be worth billions of dollars, but they might not have any revenues to show for it. And the reason to this is because its revenues are dependent on the drug success, of their development candidates. And in order for a drug to be successful, because the failure rate of a drug is extremely, extremely high, then in order for a company to be successful, they must have multiple development candidates in order for revenues to arrive, which is typically around 7 to 12 years for a drug to go from preclinical testing into full clinical testing in foreign markets. With Zai Lab, since they have 10 development candidates already and they have a consistent stream of revenues because their strategy is not to make their own drugs, but to partner up with companies abroad, it means that they actually have fairly safe revenues. They have fairly consistent revenues over time, and that is a huge advantage for Zai Labs over other companies. Now, just to give you an illustration of this, I compare drug discovery and drug development to something like Squid Game. So this may seem a little bit of a gimmick, but in phase one, you will have multiple development candidates. You can have hundreds of development candidates. Then eventually you would filter out into phase two, where only few candidates remain. That's because in phase one, they look at whether the drug is safe or not. Those drugs that aren't safe for human consumption, they get thrown away. And then in phase two, they look into whether the drug is actually effective in the disease that it aims to treat and whether it's more effective than the current drugs on the market. And then in phase three, this essentially looks into the long-term benefits or potential consequences of this drug over a long period of time to see whether or not it actually does have a significant effect. Then after phase one, phase two, and phase three, which is incredibly stringent, you have a winner. And with Zai Labs, given that they have multiple development candidates, they're partnering up with companies all the time. This makes this company fairly safe in revenues, and they already have revenue income coming in already. So a quick way to analyze a company's success is to actually look into who are their investors. And an interesting thing about Zai Labs is they have quite a number of high-profile investors. And two of them is Fidelity Management. Many of you will know who those are, but one of them is Baillie Gifford. Now, Baillie Gifford is very strong on China, and currently they are the top performing fund over the last 10 years. And Baillie Gifford have a very strong track record in finding and analyzing companies over a long period of time. And to have these types of investors participating in Zai Labs, it just goes to show how much trust they have in the management, in the diversification, in the partnership agreements that Zai Labs have. And even if we look into the analyst expectations, currently they're expecting very strong revenue estimates going into 2027. This gross margin is constantly increasing from 65% and stagnating to around 75%. That is incredibly strong for a gross margin. And the most important is to look into the growth rate. So the growth rate is actually fairly consistent for revenues, which is around 10 to 15%. And with the SG&A is actually decreasing, meaning that its costs are decreasing whilst its revenues are increasing, meaning that its profits are going to increase over that period of time. And again, just a quick meme, you've got to pump those numbers up. Those are rookie numbers in this bracket. And when we actually did our DCF analysis, we actually found that the company is very undervalued where the price was at as of the 18th of November. And it currently has a 86% upside based on our base case assumption. So base case means the most probable scenario possible into the future. And even in a downside case, the valuation is actually still quite undervalued. In the downside case, we actually expect a share price of $123. And in an upside case where things go really good for the company, then the valuation should be around $202. Now, in terms of the technical analysis, the price has actually reached a recent strong support level. You can see that this is very strong over a monthly and weekly time frame. You can see that there are some bullish indicators here, one of them being a falling wedge. It's a very strong dynamic support line. Its volume is incredibly elevated, meaning that there is a lot of interest in this stock, and its RSI is actually oversold right now. And it also indicates that the company is oversold and it has the potential to move up into the future. So in terms of the risk, look, it's very important to understand the risk before you invest into a company. And we've identified three major risks for Zai Lab. So again, biopharma companies have huge inherent risk, and a lot of it is related to drug development. And again, in preclinical experiments, a lot of drugs fail, even in phase 1 and phase 2 testing. And if some of them may even look promising, and they can even fail in phase 3. So again, its revenues are dependent on this, and whether or not regulators are going to be strict or not. And that can erode its competitive positioning into the future. Number 2 is actually has a key woman risk. And the reason to this, if a lot of the success of Zai Labs is due to Samantha Du, who is a very strong entrepreneur in the biotech space. And if she decides to leave or decides to quit Zai Labs, this could have a potential risk of Zai Labs not having good management or not having the necessary support or network or knowledge to be able to continue its activities. Thirdly, it has a degree of regulatory risk. We've seen over the last year that China has been really cracking down on companies. And with biotech, it's actually a very strategic area of the Chinese economy going into the future, as outlined by its 5-year plan. And we could potentially see some more regulations into this field, which could potentially hamper Zai Lab's growth into the future. So in terms of our conclusion and investment strategy, based on the analysis, the quantitative and the qualitative analysis, Zai Labs is an attractive offer because one, it has a diversified product offering, it has 10 development candidates and many more. It has very strong management. Again, this is shown by its ability to deal with foreign biotechnology companies and then turn those into revenues into the Chinese market. Lastly, the government actually does back biotech in the 5-year plan, although this can create some additional volatility into the future. And lastly, based on our valuation, the company is indeed undervalued with a 86% upside. Once again, from the Chinese Alpha team, we really do appreciate you. And if you have any questions or if you'd like to read any more analysis, check out our YouTube channel or go to our website, www.chinesealpha.com.